This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the MAYFAIR Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby PECK Foundation for Children's Education and the CROHN'S and COLITIS Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast. Early bird discount registration ends August 31st, 2015.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com, and welcome to today's morning call. So it is Thursday. It's been a long week. It's been a long few weeks. A lot of people are trying to figure out what's next, as the action that we've just witnessed is pretty much behind us. You've already had your spots to make adjustments, your spots to, take off some risk, your spots to get short, whatever it is that you do on whatever time frame that you do it. So what really matters is which time frame actually do you navigate. As for today, real quickly, overseas is somewhat positive. You have the Shanghai and the HK closed, so we don't have to worry about that until after the weekend. The Shanghai's been holding that 2,800 level, whether it's for the parade or not. There's a lot of speculation on that. We'll revisit that next week and maybe even tomorrow. And then in Europe, you have the ECB, but Draghi is not expected to say much, and Europe is bouncing them broadly higher. So our futures are up 6-7 handles. So let's take it back real quickly to the S&P or the S&P cash, and talk about time frames, and just go over a blog post that I put up yesterday before we get into today's daily action. You look at the chart of the SPX, okay, and you'll see that this is your weekly chart, and a lot of people were trying to figure out how you could have navigated, what potentially could be next, and what this truly means. Okay, right here is your active intermediate trend. Okay, and that active intermediate trend got broken. That got broken when we triggered below 2,040, while most sectors were all below their 200-day moving average. And basically this obviously had to go below the 821.50 first, and then below the 200-day. This channel that was put in place for 7 months resolved lower. So this trend that's been intact since the low, back here in 2011 has been broken. This is only one trend. And this is only means, you change your trade somewhat. And what has happened since then? You had that big move lower, okay, which happened after breaking the trend into that Monday. And now, we've developed, a new range here, okay, a new range that I will get into a little bit later, in the morning call. But as of right now, we're off, I don't know, about 8 or 9% from highs, which is about normal, considering that that's what happened way back when in the past. Only in the last few years did we not have a real 10 to 15 to 20% correction. So anyway, this is good. This creates volume. This creates interest in the market versus this monotonous range that we had where computers were just trading with each other. So anyway, here's our move lower. I want to show you, just real quickly the monthly, which is a bigger trend. Okay, the monthly chart. If you put this in place, you go all the way back from, the 2000. Actually, let's go back to the weekly one more time. The 2009 lows. Okay, so that's that trend. So now, if you go like this, you will see there's another trend. Okay, this was from back in the low in 2009. You draw it like this, and it pretty much comes in right around 17. 17, a little bit lower, 1740. So right now, the question is, does this low hold at 1830, or do we potentially see a little bit lower prices into the 1740 area? So with that said, let me take a little quick drink, and you could take a look at it and see for yourself, what this kind of looks like. All right, so basically, when corrective phases happen, everyone's going to guess what's next. You don't know. You have to take it step by step. And as of now, excuse me, you had the active trend broke, now you're trying to figure out if the trend of the past 4 years stay in place, and then even the trend, since the 2009 lows. Okay, and then going back to the monthly, a lot of people just wanted me to put this up. I remember doing this chart so many times. It was such a fun time when the S&P took out this double top at 1576, and it's gone a long way. So with that being said, if you take a look at the overall market, for the past few decades, obviously if you've had a long-term monthly plan, you've done just fine. Here was your, big channel of that. Remember the decade of pain? That we wanted to break into the upside. Remember I was with, Kramer right here saying I think we can go to at least 1700 when we break 1576, but that was then, this is now. So as of now, this trend has basically been broken. Now we'll see if we, go sideways for a while or, head down a little bit. At this point, nobody truly knows, but you don't have to. All you need to know is your time frame. Okay, now talking about time frames, let's just go back to the daily chart. Okay, we'll go back to the daily chart. Let's go to the spiders. Okay, the spiders on the daily chart, look at that. Let's get us back to what we trade every single day, for cash flow, for alpha, whatever it is that you do. Okay, so right here is the lower range, and then we're starting to wedge again. Ooh, another wedge. Remember the last wedge? The last wedge we had was actually right here, okay, within that channel, and this wedge resolved to the downside. So you didn't need to know which way we were going to go, and then boom, to the downside. So now here's that reactionary low. Okay, here was that retest of, I'll show you where that was, of the resistance from, or support that turned into resistance from right here. And now the market's trying to pack and fill and figure out what's next. So what do we have here? You have a low, you have a higher low. Okay, here's your high. Today we're filling this gap. I did get long yesterday. If you're on the VTF, you saw that I was long the spiders, Apple and Facebook, and we had a nice close above the prior high. So we are in this gap now. This gap gets filled at 197. Okay, I've already sold, a portion of my spiders up, 75 or 85 cents this morning, and then we'll see if this gets filled, and then we'll see if maybe there's a lower high put in. Okay, and we'll see if this channel gets a little tighter before it decides to figure out whether it wants to take out the upper end of the resistance or it wants to come back, and head back towards the lows. But for right now, the market hasn't proved that you could add on strength. Lately you can only buy in the hole and then you have to sell into strength. So yesterday on that gap up, if you bought Tuesday into that mayhem, you know what, you took some risk and you got rewarded on the gap up. You didn't have to though, considering that yesterday there was enough time to re-enter some positions that showed their colors yesterday, as some did get stronger, and then here's your follow through. You sell some and maybe hold some just in case there's traction. Looking at other sectors, the Qs looks very similar. It actually led off the lows, this too, but I'm not going to get into all the time frame stuff here. But basically you had your trend break here. It already came back up and retested the broken support that turns into resistance, and now the question is, does it stay below it, and what's next? So with that being said, the Qs did already close above yesterday's high. Here's your resistance. It's opening up into it. So I guess the real question is going to be, can any sectors take out this inside range and head back into upper resistance, or does it fail there? At this point, you had a little bit of a bounce into resistance. I think you do trim into this. Don't add, especially with the jobs report tomorrow. So you shall see. Yesterday was actually pretty good to see the bios, finally, had a little strength. If you remember, the bios were a very, strong sector, a sector that we traded a lot and tried to buy more than sell, and then all of a sudden this channel broke right here, or this trend line broke the 50-day, created that head and shoulders pattern that all the bears love to see, and so do traders that trade with technical patterns, because this head and shoulders pattern gave you a really nice trade when it broke below the neckline here, right around 360. Look at that big move lower. So now it's hovering in here. So the question is, does it pop back in the range, or does it get sold at resistance? Well, yesterday when the market was coming in, the IBBs are up 3-4 points, and then when the market rallied, it extended. So if it's up a little bit today, I don't know if you could add, but you want to see if any sector, can be added to on strength. So here's your resistance. You probably want to sell into this, not buy or add, because it's going to be really hard for this to break this descending channel here, at least today before the jobs report, I would think, or even this week. Next week most people are back from vacation, so it might need that. So here's that descending channel that's been better to sell than to buy. but we do have a low, a higher low. So this spot will be interesting. So as far as now stocks, there aren't that many stocks that seem like they could take out last week's highs. You've had to buy them on extreme dips and trade the ranges, and there are a few that look like they're in the game to do that and could give us some clues if there's any power, or we're just, again, in this range and we need a lot of time. Apple's been acting better for itself. In the beginning part of the year, it's been in that range. It fell out of the range, and now ever since that low back from last Monday, it's actually acting better. Okay, it's come right back into this end of the range, all right, and really didn't pull back that much. Okay, if you look at the move from that stretched lows into resistance, one down day, closed strong yesterday. So we'll see if Apple, could lead again and take out, this what is this, 113, 114. So this was last week's high. It came in 114.5, and it's still below the 200-day. Overall, if you're trading Apple, you're probably doing better than recently holding it. Here is that channel break, right there. And obviously, that one of the catalysts was the quarterly earnings with the gap that never got filled. So the question now is, can it break this descending channel? And that's what you have here on Apple, or do you need some more time? So this could give us some clues, also for tech. Elsewhere in tech, Netflix changed a little bit. You had Citron, right, this big short report. They're short Netflix. Either it's going to do two things. It's going to make people not trust it as much because you also have Carl Icahn out of it, and it is a high valuation name. Or everyone's going to short it trying to be cute on Citron's note, and then, the buyers still stay there, and then you're going to get one heck of a squeeze. At this point, I have no position in Netflix. I actually made some money shorted yesterday, believe it or not. Everyone thinks Red Dog can't short, which I am not really a good short. But anyway, here's your support. So this is that $100 level. Here is micro resistance right around 109 to 111. So this will be the battleground. Do the shorts have the power to keep it down for lower prices, or does all of a sudden this add fuel to what could be a move higher at some point if the market wants to get its traction? So we'll figure out what's next there. On the stronger side, another stock that probably should be on your radar for the bigger ones, the loose and wide ones that could give us some market power clues or not, because it might not go through, is Amazon. Amazon had that quick reflex low, okay, came back up into resistance, okay, right around here, and now it's getting tight again. Okay, we all know that Amazon is hard, though. Remember this time period, a lot of us are trying to play a breakout, and it failed with the market. So now we're pretty much overthrow back in the range, and it's just continuing. Does it wait till next quarter? Does it, show power before? I don't know. I haven't really been trading Amazon much lately. I've been just watching it by, the side of my eyeball to see what's going on in high beta tech. It's been a little too loose and wide for me. Same for Google. Google definitely, is in the game. It's very choppy, to say the least, and you could say there's a little bit of a wedge forming here too, and we'll see which way it resolves. The first move here, remember, we were looking for strength. That was when the market looked somewhat good. This candle right here closing into the gap got a lot of people out of the stock, and then sideways action. Now we'll see, does Google help lead the market and show us that you can buy higher and sell higher, or does it stay in this range and make it harder? At this point, I'm just going to watch it, but it's pretty, look at this pattern here. It looks like I could create a new pattern here. It's like a naval ship or something like that, right? Here's your top end of it, and then here's your, I don't know what that looks like. Anyway, it's getting tight in there. We shall see. Another stock that actually looks good that people like to trade on the VTF is Tesla. Tesla, the Consumer Report came out saying one of the best cars ever, and now they're talking about the Model X, and Tesla overall had some volatility, but this too, had your move lower into like everything else, came up and really didn't pull back much. And now you have this descending channel here where if you were short against this, with an opinion that Tesla's high valuation, I don't think the electric cars are great, I don't really like Elon Musk, anyway, I'm on the flip side. I think that they are innovative, and it is cutting edge, and at some point, obviously it's high valued, but the technicals usually rule here until they don't. Okay, and at this point, you have this ascending channel here, and you have a big resistance coming in around 256. So if any stock could exhibit some power and show that you could buy strength, it could potentially be Tesla today. So, watch Tesla today, tomorrow, and see, if that gets rejected there, which it could. I'm not saying go out and buy it there, but it'll be interesting to watch to give us some clues on whether or not there is anything that could have some power. MBLY, which some of you still have in the drawer, or some of you are trading, it too, had its plunge like everything else, but it bounced back pretty well. At this point, if you're long it actively, you could be long versus 52, and then if the market wants to, I guess, act better and create some leaders, this is going to have to get above 58, to get back up into this area. Overall, this was a great trade for a lot of us in the last few months, and then all of a sudden, I remember I was long it into here, and I got stopped out right there. So good to use stops. If you use stops, maybe you bought it in the hole, or you've been just sitting with it in the drawer ever since it broke this descending channel, down here, which is we love descending channels because when descending channels break, you're not buying 52-week highs, you're buying it typically lower, and then you have room to get all the way through 52-week highs, like what happened into there. So there's a lot of room there. So with that said, I would watch MBLY also. So this is really my list of the go-to names to trade, with some social media names also. Facebook, I think, being obviously still the best in breed, but a little choppier lately. This one too had a very nice bounce. If you sold here when it broke this support, you were able to buy it in the hole that day, and then it had a reflex move up, and it held higher again. So now you have this little inside pivot. Question is, can a name get back and make a higher high in the week? If that's the case, it's 91.48 for Facebook. And then you obviously have another wall of resistance there. So, some of these strong names can give us clues if there's going to be any kind of buyable strength versus just buying the hole and sell strength. Twitter has its big shareholder meeting today, or its board meeting, or et cetera, et cetera. It's acting a little bit better. Ever since this reversal low, it held up. Now it's making us another small little pivot. I would say I don't know what could be so exciting to come out of it, but if it can clear this, what is that? That's like 28.49. Maybe there's room at some point before next quarter's earnings to get back towards 32, which is a nice percentage trade if you haven't been caught in this mess, especially since, remember when it did that pre-release and broke this key area. Since then it's been a mess, and at this point there is some room if you bought into this situation. I have some actual options on, but I have them on from like right around here, so I'm just about in the money, so we'll see. And lastly, let's just talk real quick about oil. Oil had its biggest move in 25 years in 3 days, and it had some, they had some opportunities to sell it off again, and they couldn't. So that could also be decent or constructive for the broader tape. If the low in oil is in, that could help, because if we were to make new lows in oil, then all of a sudden all the oil service names and the oil stocks, they'll be talking about all the bad debt and the bonds and then this and then that. So if the low in oil is there, maybe that is some fuel for the bulls. If it's not, we'll be back in that same trade and that same downtrend. But for now, the USO, we talked about this descending channel that broke to the upside here. Okay, you had your 3-day move, and now it's holding up a little bit and flagging. So if oil is going to be any good, or the USO is going to be any good, just be long verse 14. If 14 breaks, get out of the way. And then at some point, who knows, maybe after enough time it continues to the upside. You could do the same thing with the XLE. The XLE gave you your first move back to resistance, which is where it stalled. Okay, but this was really a lot lower resistance. I mean, so here was support that turned into resistance. Then you have another big level here. So the question is, can it go a little bit higher? So to measure of whether it can, you want to see if there's commitment in higher lows. So we talked about if the XLE is any good, it should hold at least this gap, and it's still above it. So maybe at some point, this thing wants to continue to go sideways and give you another move up. If it gives you another move up, that'll probably help the broader market, and then your next area will be there. So, we'll see how that transpires. So there's a lot to look at, and I know this morning report was a little bit more thorough. So if I bored you, you know what? At least you're still watching. If you wrote down levels and you wrote down thoughts, this is probably my last morning call of the week, because I trade from Short Hills tomorrow, and then Monday is Labor Day, which hopefully everyone has a great weekend planned. Back to school started. I love this time of year, the fall. You have football, you have school, the kids are all excited, and the weather is nice. Hopefully this friggin' heat wave breaks, that I think it's gonna for the weekend. But I just wanted to, have you guys prepared and just a quick look on lots of levels, because over the weekend you're gonna read everything about you know, China and the debacle, what it means here in the stock market, that's down 10%, could be down 30%. And I just want to show you that it's all about your time frame. You know, if you sold the market, or if you're an active trader and you saw below the moving averages, you probably didn't get caught in that melee. If, you know, you're long-term 401k, IRA, etc., you know, and you're my age, you know what, a little corrective process would be great. Helps your average cost. You know, when my wife started a 401k, she did it in 2006. She did it all through the financial crisis. By the time 2010 came around, her average cost was awesome. And at this point, don't know if we're going to make new highs this year, next year, who knows. But if you're, you know, have a long-term objective, monthly flows will help you. But if you trade actively every day, you have to know a little bit more than that. You know, you need to know levels, moving averages, chart patterns, what the market's obsessing about, the feel, the composure, the speed, the volume. But once again, you know, it all depends on how you approach it. Tomorrow we have the jobs report. You know, according to JP Morgan, they're saying that the only thing that might deter September liftoff is a print less than 170. They think an inline print would be good. They also think that liftoff could be positive. You know, it would show that actually our economy is okay and we can handle 1/4 point interest rates versus 0. And that's something to embrace versus sell. So a lot to look at, a lot to see. Keep moving those feet, keep looking around, stay prepared. And if you do so, there's a lot of opportunities out there. Scott Redler, The Morning Call. See you at the recap. Have a great day trading.